Okay, testing, 1, 2, 3, testing, 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly on your pants. So good morning. Looks like the stream have finally got going. It is Tuesday, November 20th, 2018, and this is your daily Forex trading strategy session. My name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. And if you're new to these webinars, please visit TradersWay.com and open up a demo account. Test our execution speed, our world-class customer service, our competitive spreads. Give us a chance to earn your loyalty and respect. Also, a big shout out to Forex.Today. Thank you for hosting us. Thank you for everyone visiting at the Forex.Today YouTube channel. Make sure you subscribe, make sure you like, and also if you want the chart templates that I use for MT4, they're in the description below. Just click the link, download, and there's even a video that shows you how to install them onto your trading platform. Without further ado, let's go. All right, so good morning. I know somebody said down several thousand demo dollars today. Well, first of all, it should be relative. So several $1,000s if you have $1 million, hey, not a big deal, right? But if that is a significant percentage, remember under the rules of engagement that I advise you, your worst month should, equal essentially all your trades for that month failing. Like the worst month on record, the what do they call it? The flood of a century, right? Right. So, anyways, I'm looking at Brooks' comments too. So, anyways, what you're supposed to do is look at sort of the worst trading month out of 100 years that you could possibly have, and that's probably every trade going bad. And then you reverse engineer the thing so that your lots, the lot size of each one of those trades should be small enough relative to your count size that your worst trading month should add up to whatever you want your worst trading month to be. So it might be like minus 5%. If you make 30 trades a month and all of them fail, depending on how big your average lot size is and all that kind of stuff, you boil it down to your trading size. Relative to all of that, if it all fails, you lose 5%. Because then you know, that's almost impossible. Like your risk to ruin and all that is so low. But it's almost impossible for you to have that bad of a month, which means you should never have anything worse than minus 5% on your trading account. And if you do that, you'll probably become a professional one day. And you'll say, oh, but Wayne, I'll make so little money. Well, if you're managing billions of dollars, a negative 5% month is pretty bad. So you don't want that. So you need to trade now like you have $1 billion. Yeah, Brooke, and then Brooke comment, it only took 30 minutes for the yen pairs to collapse. Yen pairs can do that. Remember, I told you it's risk on, risk off. The dollar can do that. The yen can do that. The Swiss franc can do that. There are a few others, but those are the big boys, right? And that's what happens if something exogenous happens to even just the trading of those assets, right? Missiles fly somewhere from one to another. Who knows? That creates like yen strength now. Okay, just like that. A terrorist attack, yen strength. Okay, so you need to right. So you need to be careful. And it doesn't happen often, but things do happen, right? Okay, now Joe, I've been there. So Joe says, who feels like the minute they place a trade, the market turns against it? You know, many years ago, I did feel that way to the point where I would do all my homework, I'd do all my analysis, I'd create my trade plan for the day, and then do the exact opposite, right? And that didn't work either. Typically what happens is you're doing the wrong thing at the wrong time. So I'm guessing what you might be doing is waiting for like 7 levels of confirmation before you make a trade, which makes you extremely late. Okay. Or you're trading against the trend, and the trend almost always wins. That's why, like, I don't get excited about setting you guys up with counter trend trades. I'm like, look, you know, that's not really what you're supposed to be doing. Or if you're going to do a counter trend, I prefer it to actually reverse first and then do it and all that kind of stuff, right? Yeah. And maybe here. So anyways, so yeah, instead of focusing on your feelings, focus on what is going on. And you might find that you have a tendency to be late on your trades. So therefore, you end up setting yourself up with counter trend trades because you missed the trend trades. And that might be the bigger issue. And then if that's the case, why? Right? Take the emotion out, be an analyst. Pretend that you're analyzing someone else's trades and you're going to make recommendations. Okay? Try to leverage it as an experience. Because it's going to happen again 10 years from now, Brooke. You need to have the skills and the experience to see yourself through. Okay? So just remember, the yen pairs are great when they're working for you. And of course, they're horrible when they're working against you. And that's the double-edged sword of trading. Okay? Well, it's not cannibalistic if you trade in one direction. Okay, John? So you need to look at, and it depends on how you define swing trade, of course, but let's just say if you look at what you're doing over the course of months and years, it's not cannibalistic. So just if I understand what you're saying is correct. But anyways, let's just get going on some trading. Okay. First thing, you see lower low, lower high, lower low, lower high. Okay. Also, this is the follow-up to the that big drop we had. What was it, Thursday? The Theresa May thing, right? So this is a sell zone. Okay. And it's a standard swing trade. It's a roll reversal. So no freak out here. That's all pretty standard and straightforward. What? Oh, this is scan pound. Okay, so here's another interesting one, right? Big drop on the yens. Standard operating procedure. There's a sell, right? Here's a sell. And the only buy that there is on this is right here. So I'm not sure where chaos hit you, Brooke. Yuri, you would just Google yield. You just like what's the yield or the carry on pairs. Okay. It's funny. Why is this in the pound? Do we have euro pound? Maybe that was supposed to be euro pound. All right, I'll change that. La, 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 la. Okay, here's a big move last week. You see how last week we were coming down, 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 down into the monthly target. We hit our monthly target. So we know logically we should be done. We don't know for sure, but logically this is where we should, the downward move should end. And of course it did. And again, this is the Theresa May having her problems. So what is the trade plan? The trade plan would be identify this as a bullish buy zone, okay? And then you would add to that by saying, all right, here's a roll reversal. I didn't want that, even though it worked really well. Delete. Wanted this. Okay. This is a bullish roll reversal. So we want to kind of identify that. So that makes this whole area interesting. I'd say the weekly, the monthly, and the roll reversal. Okay. So a bull would buy up into there, or I should say buy down in here. What would a bear do? Well, this is a bear zone, right? But they have to beat this 21. Okay. So they might try to take something down like this, which is great for bulls because then we want to buy it. Okay. There's a chance that it stays above the monthly central, in which it takes off early, and the bulls, it's tougher for the bulls, even though it's bullish, it's tougher because you didn't get the price you wanted. Of course, the other thing is if you're aggressive as a bull, you know that this 4-hour 21 is what you're taking because the week essentially opened out of position. Not radically, like we're still above this level or still below this level, but technically. Okay. Yeah, just as this is a week, this week is instead of waiting for pullbacks. Well, that made me think of something else, going back to other people's conversations that have had a tough time. Yesterday I said, this is a week you're not supposed to lose a lot of money. So you need to pay attention to those little things I say. This is a holiday week in the United States. A lot of professional traders are not even trading. They have some interns doing some things like babysitting the algos, but all the big boys are probably in the Caribbean. They've taken their private jets last Friday to the Caribbean, and they're sipping on whatever they're sipping on, Caribs. But anyways, this is a shortened trading week. You need to also look at that and say that is an additional level of risk, right? So write that down as a lesson too. This is not a week you're supposed to lose a lot of money. So if you lost a lot of money, why did you lose a lot of money in a week where you're not supposed to lose a lot of money? And very often I find it's people that just trade every day like every day is like every day, which is not the truth. Every day is not like every day. Every day is different. Different months have different levels of volatility. Different holidays have different impacts, seasonality, market psychology. If we're worried about an election, if we're worried about geopolitical risk, all these things change things. So every day is new. You should walk into a week like this and say, well, this is when Americans tend to go on holidays. Probably not a lot is going to happen, so I need to be cognizant of that, and I need to manage that uncertainty as additional risk. So God forbid, whatever happens, I don't lose a lot of money this week. It's kind of how you need to look at it, right? Okay. Well, John says, indeed, thin trading means that it's easier for some guys to move the market. So, well, to me, the bigger risk, although that is true, John, I think the biggest risk is the market doesn't behave the way you expect it to. It's not that I'm worried about being pushed around. I'm worried that if I buy at support, it doesn't go up. If I sell at resistance, it doesn't go down because I'm not big enough to move the market. Nobody, let's say if other people don't do it too, then nothing happens, right? So it's just the technical analysis is more likely to fail in a thin market than a volatile market even. Okay. Now, a volatile market will blow through the weakest levels of support and resistance like a hot knife through butter. And so now you got to look at the bigger stuff, right? Oh, no worries, Rob. Yeah, right. So, John, John's making good points. And the whole issue, guys, is you need to be able to be really good at identifying the market, the conditions of the market. Now, there are probably people here like, what? I had no idea Thanksgiving was coming up. Well, this is something that you probably should know. One thing you should probably do is go to the New York Stock Exchange and look at the holiday calendar. Okay? And what you'll probably see, I mean, I haven't done this in years, but what you'll probably see is Thursday is off, the markets are closed, right? Friday, I think banks are probably closed. The markets are open, but only half a day, and they're only doing that because they're legally required to do that. But basically, nobody's trading. And then when you add humanity on that, there's a lot of market participants are either not going to trade much or maybe just kind of just manage things Monday, Tuesday, Wednesday, and then the market's closed, right? Thursday, Friday. And so really, this is not a good week to lose a lot of money because you're forcing trades into a market without analyzing the market first. And we as traders, especially retail traders, we need to get really good at measuring market conditions. This is not a video game. You can't just, this pattern makes money all the time, that pattern makes all the money. No, we have to really step back a lot. This is why I ask like simple questions like, where is the market going this month? Where is the market going this week? Because that shows the intent. It shows direction. It shows market conditions. So, for example, if the market is falling, and this is probably a counter trend trade, which may make it dangerous. Okay, and also I want you to get really good at saying, well, if I'm a bull in these market conditions, then here's what I am going to do. Okay, one, I need to pay attention to the 4-hour 21 because it did open out of position. Okay. And if it kicks off this 4-hour 21, it's going to hit up to the target. So I might be interested in taking that shot. It's aggressive in a thin market. Maybe it's not the best move, but I will watch this and I might take the shot. But really, the better plan is I'd like to have a retracement down to this number, 89.15, so 89-ish, and then I'll take it because it's a swing entry zone. It's a monthly pivot, it's a weekly pivot, and it's a role reversal. So I will do that. Okay? And you see how that's a solid, logical trade plan? And, especially on a 4-hour chart, it takes forever for these things to set up, but then it takes forever to lose a lot of money as well. Right? I want you to also, for those that had a tough opening to the week and you've lost some money recently, where did you lose the money? On a 5-minute chart or in a 15-minute chart? Did you make 9 trades in an hour? How are you piling up these losses? We need to really look at that because some of these swing trades have basically done nothing for the week. So I'm like, well, you couldn't have possibly lost a lot of money, right? So let's say you shorted this. This is a great short if you're a bear. Now, it hasn't fallen. Well, that doesn't bother me, right? But this is a weekly and a monthly sell, right? This is a weekly sell pivot, a monthly sell pivot, a weekly sell pivot. If you happen to be a bear, you could have talked yourself into selling this. Now, it's a little aggressive and stuff, but you might have done it Monday. Well, it's now, Tuesday? It's been 24 hours, and you're probably break even. Where's the lot of money loss scenario, right? Right? So use the experience as a learning opportunity and don't get frustrated. Just say, aha, I found something, maybe, what happened? And go figure out what happened. Because you're going to go through periods like this all the time for the rest of your life. And focusing on the emotion is only going to make you quit, or worse, blow up your entire trading account. So get really good at this. Get really, really good at this. How did you lose a lot of money in a market? Like look at pound yen. Pound yen hasn't done anything in 24 hours. How could you lose a lot of money on that? It seems almost impossible. Well, okay, on a 5-minute chart, you can make 15 bad decisions in a day, but you're not supposed to be doing that. So now you need to back yourself out and say, well, why am I doing that? Right? And this is also, and one more comment, and then we'll move on. When you do really well, and I know, Brooke, you've come in, you're like, oh, I made 1,000 pips or 2,000 pips so far this month, right? And I'm like, hey, really good. Just remember that those are the market conditions. Well, okay, Ross says treating a demo account as, let's see what happened. Yeah, that's bad. That's bad. I don't agree with that. That's like going to a driving range and hitting 100 slices in a row, or even worse, tilting your club in a weird way and changing your swing in a weird way, and then hook 100 times in a row, right? But anyways, when you do really, really well, okay, when you do really, really well, the market conditions only agreed with your bias, okay? Your bias fit the current market conditions, okay? When you do really poorly, your bias is not fitting the market conditions, but for some reason you're still trading. And you need to look at it like that. It's not you when you're going through a tough period, and when you're making pips, like when the pips are jumping in the canoe. Once again, it's not you. You're not brilliant. You're not the smartest guy in the room. You're not the biggest guy in the room. You're not the most talented person in the room. You're trading. The market's going up, and you're buying dips. Like really, right? But I don't know, we're entrepreneurs. Maybe a lot of us are only children. I love it when people, oh, you're the best, Wayne, and I feel so good and warm. But really, dude, we're buying dips in an uptrend. What's the big deal, right? But when things go bad, all you're doing is trading when the market conditions are not favorable to your bias. So you need to step back and say, well, what happened when I lost a lot of money? Why was I buying in a falling market? And that's what you need to analyze. And then, of course, if I say, well, what is your bias? You're like, well, I don't have a bias. Well, then I'm like, okay, you just suck. You don't know what you're doing, and therefore your results are very inconsistent at best. But I know, like Brooke, for example, has a bias and all that kind of stuff. So, I would step back and identify what went wrong, right? What went wrong, and that's that, okay? And you'll be fine. Just realize that this is a challenge. It's not you. You're being tested. Okay? But even the pound hasn't done much here. This is the pound dollar here. That looks like a nice little short. This looks nice. Okay. Anyways, let's go to the standard operating setup. So I hope that was helpful, the trader psychology stuff. Best thing to do is look at yourself as being in a 15 or 20 or 25-year career, right? And ask yourself, what can I learn from this? Okay, WTI. Here's an example of me being frustrated, right? This is where I stopped wanting to buy. Way up here, remember that? And I'm like, that's it. I'm not even looking to buy. I'm only looking for it to bottom out. Now that I'm protecting myself psychologically. You see? When I say that way up here, I'm like, that's it. That's my Alamo. I'm not even looking to buy it anymore. I'm simply looking for it to reverse and prove to me that it's going up versus me trying to force a buy, force a buy, force a buy. Way different psychological approach because I can't control the market. So if this goes to 30, right? So at some point, I either have to adjust my bias or I just keep waiting. So anyways, so I let it go here. Down, down, down. I thought, you know, it could really bounce here. Oh, nope, didn't do that. So, but the thing is, I'm not looking to buy this. And in fact, I put 2 sell opportunities and boom, you would have made a ton of money. Okay? So we're still in this kind of place where, wouldn't this be an awesome place for a double bottom? Yeah, wouldn't it be great? It would be great. It hasn't done it yet. Okay? And you can see I drew this channel, like if it was going to head down, it would do it in this way, right? And then yesterday we set this up. This is a sell zone on a weekly swing. I don't like to sell weekly swings in a monthly bottom, but look, I'm not the market, right? It's like I don't like selling at the bottom of the market, but somebody's selling at the bottom of the market. I don't know. It's the Russians. It's the Iranians. It's the Saudis. I don't know. Somebody's selling this. It's the American government. It's the CIA, for crying out loud. They're punishing the Saudis for killing that reporter. I don't know what's going on, but I know where resistance is, and I know where the bears are going to sell, and that was here, and we talked about it yesterday, and well, it looks like it might break out to the downside. Doesn't matter why. Who cares why? Okay? But what my plan was, looks like 7 calendar days ago, was I'd like to see a double bottom, and this was representing the breakout by last week, right? Like if it does this now, way up here, yeah, then I'll consider buying a dip. But right now, this is just, that's never going to let me do it, huh? Well, it's just an area. Okay, where bears would sell. That's without a doubt a bearish sell. Oh, it's above. That's interesting. Okay. Doesn't mean it's going to fall, but if you're a bear, like, yeah, you certainly would sell it. Now, where would a bull buy? Well, right where I said last Tuesday, right? Last Tuesday I said, bull's going to buy it here. So it looks like on Monday they bought it there. Why? Well, gee whiz, where else would they buy it? Okay. So now doing something here is going to lead to very inconsistent results. Right? Trading now leads to very inconsistent results. Selling high or buying low near support or resistance means your stop can be just below support or just above resistance, and therefore you're actually not risking a lot. If you traded now, let's say you shorted now, your stop would have to be in the same place. So you think you're being more conservative, but you're actually risking more, and that doesn't sound conservative. Is that right, DI? Moon cycle coming up? Maybe it's more difficult to suck oil out of the ground or something, huh? Cool. Oil, right? We were trying to guess where the 4-hour 21 was. Okay. This is moving, right? So I'm hoping that means dollar weakness. And how many times have I gone through that speech about the dollar weakness, right? Chuck, there's the fiat guys and the thumb down guys, right? The people that log in early to thumb down first. Like, what's the psychology in that? You guys ever watch the movie that about that crazy radio DJ? What's his name? The one with the crazy hair. Howard Stern. It's actually a good It's actually a good movie. Even if you hate Howard Stern, it's actually a really well done movie. So, anyways, there's a scene where they hire Howard Stern at a big radio station in New York City, and the manager just hates him and wants to fire him. And the assistant or whatever, the analyst goes, well, actually, more people are tuning in to listen to him, and we've surveyed them, and they love what he says, and they love all this, and the number one reason that they listen is they want to hear what he says next. And he's like, yeah, but, so we're getting hate mail and hate phone calls, and we're going to lose sponsors and stuff. And they said, yeah, well, actually, 61% of our listeners hate him. Right? And the manager's like, what? People are tuning in because they hate him? And he's like, yeah. He's like, well, why would people do that? They said, well, the number one response to the survey was they want to see what he says next. So, right? Yeah, pig vomit. That's funny. So anyways, I don't know. I don't know about the guys that log in to thumb down me in the first 2 minutes. But anyways. Let's go into, I guess we'll do euro dollar. Okay. So this is back to the 4-hour chart. Okay. Interesting things going on here. Okay. First of all, we talked about opening out a position. Maybe it's going to fly up and hit the weekly target early. Hasn't done that. Okay. You could still be in a situation where you're buying the 4-hour 21. I think this is where we were guessing it would be yesterday. Didn't quite get that, so we got to take that out now. Now, of course, the number one, you know what? He's good in, I think, almost all his roles. I can't think of too many roles where he's just terrible. Right? I still say, I will not drink Merlot! He's so mad in that movie about refusing to drink Merlot. That he was so good in that role. Merlot sales in Napa dropped for like 8 years or something. People refused to drink Merlot because of that movie, which was amazing. Anyways, this is still the big question that we talk about all the time, but it's going to be something we talk about all the time. Everything you do, like on this chart, is going to be based on your bias. I don't know how you would possibly trade this without bias. Okay? So, I kind of have everything set up here as a bull because, well, I want it to be bullish. Okay? So, like, a bull would buy here. There's no doubt. Okay? A bull would buy way down here, basically. That's a tough nut, right? That's got to fall a lot before you buy it. Yeah, well, if I wait, I'm not going to lose a lot of money. Okay? You see what I mean? Like, it's one of those things. How do you lose a lot of money when you're waiting for your trade plans to set up? Okay? It's difficult to lose money while you're waiting. Okay? That's a bullish point of view. But look at this. Look, man. So I'll take out the stuff I did yesterday because that was an open out of position trade plan. Hasn't really come to fruition, so delete it. Once again, waiting, didn't lose a lot of money waiting. But look, if you're a bear, oh my God, that is awesome. I'd throw in this area here too. This whole area as a bear. So you got this price action top, okay? You got this sort of a double top type price action. But this monthly M3 is by definition, is the monthly sell pivot. Right? You know that, right? So, like, it's, yeah, See, I probably didn't talk about it enough yesterday, but I'm a bull. I filter everything. I want this to go up, so I'm going to miss things like that. Or, that is bearish. Somebody knows what they're doing on this one, guys, because they have a bearish trade plan. Or maybe they have an algorithm just says if your definition of the market is down. So there's a $50 million computer that looks at this and says, down. Good. $50 million well spent. Great. So then they follow that up with, when the market is down, sell at M3. Okay. Boom. Right? There's your algorithm. Now you trade like the hedge fund managers. Trade like the big boys. Right? Sell pivots in a downturn. So somebody's going to sell there. Doesn't mean it's going to fall. But like if you were going to sell on a monthly basis, that is the pivot you want to sell. Okay. Now it's not good because we don't get the proper overlap and all that kind of stuff. Yeah, but if even on a daily chart, you'd say this is kind of a consolidation zone, right? But look, if you were a bear, would you sell this? You're going to treat it like a 3A2, right? Lower low, lower high, right? With the monthly M3, like, right? Okay, so what you should be doing now, if you are a bear, is recognize that this is a trade zone for bears. We don't know if it's going to work, but there was definitely something here. So now set up basic technical analysis. What's the next move? What do you do when you make a lower low? You look left, find the old support, drag it across. There's your new trade zone. Okay. You had 1, 2, 3, 4, 5 hours to set that up. Okay. Once you start to see green candles here, so let's say we're down here and then it goes green, green, green. Again, it'll take hours to set that up. You would find this as a bottom. You would look left and make that your new sell zone. Right, Martin? So what I'm trying to preach, like to people, especially you newer folks, I'm trying to preach that you can analyze the market and discern where bulls or bears are going to be. And you should also know whether you are a bull or a bear. And you don't open up the chart today and make a decision for today. You look at long-term fundamentals, you look at long-term technicals, you do your analysis as an analyst of the foreign exchange market. This currency relative to that currency. This central banking policy relative to that central banking policy. This trade data versus that trade data. Okay? This level of inflation and productivity versus that level of inflation and productivity. And then you say, well, on euro dollar, and then you make a decision. If you're a bear, which means you're more positive on the US dollar than the euro, then your hard work is done. And those details, like import data versus import-export data versus import-export data, now we're talking about not like today or this week or this month or even this quarter. We're talking about like this year or the next few years. No, not commitment to traders report. That just shows you positions, older positions too. But you can use it. I'm just saying you wouldn't use it that way. It'd be more of confirm and deny tops and bottoms, really. Okay. So once you know this, like you know you're a bear on euro dollar. Okay. Now I'm a bull, but that's all right. Because you can see, I could be wrong all this time and be right all that time. So if you can just use technical analysis to say, don't buy it here, but buy it here, Now you're going to have lower volatility in your trading history, and you'll probably be profitable. And that's what we're getting to. I don't want you to be, right, this day you're selling, this day you're selling, this day you're selling, and now this day you're buying, and this day you're buying. No. That's probably too difficult, especially to begin with. I'd rather you, for 3, 4, 5 days in a row, you don't get any trades, and for 3, 4, 5 days in a row, you get profitable trades. That's ideal, right? So anyway, I propose to you, if you were a bear, this is a pretty interesting place, because you knew, 19 days ago? You knew 20 days ago that this was a sell pivot. 20 days ago. Okay? And you probably sold here for the exact same reason. Okay? That's all I'm saying. So now you come to the game, you're like, okay, game on. We're at the monthly M3. I am looking for reasons to sell, and I'm going to fire for effect, right? So now you're drilling down. You're like, okay, well, maybe, mediocre. Whoa, that's the big thing. That's it. That's what you've been looking for. Double top, lower low. Not just the touch. Not just a double top and then right? But this is the, right, can't miss it moment, right? But if you're looking at it from this point of view and you're like, well, maybe I should buy it or maybe I should sell it, and I wonder what's going to happen today and I wonder what's going to happen tomorrow and blah, 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 blah. You're never going to be able to get consistency because you're not going to be able to read the market. Also, you're not thinking the future. You're not thinking in an hour, in a day, in a week, right? What you're looking at is like maybe now, but mostly past. Okay, so you're like, you were a bull here and you were a bull here and you're going to be a bull again, but you're ignoring the M3. But the M3 is a leading indicator. Why would you ignore a leading indicator and rely only on lagging indicators? Well, you shouldn't, right? So once again, if you woke up in the morning and you're like, well, for the last 450 days, actually, I bet you it's been more like 900 days. For the last 900 days, I've been a bear on euro dollar. Right? And then you open your chart and you see like, whoa, you would have caught that. And that's what I'm trying to get you to. Okay? You would have caught that. I know it. If that's what you were doing, you would have been dreaming about it last week. Like, oh man, we're getting really close. Oh, we're right in there now. This is getting exciting, right? And another 2 or 3 days pass, and then you're like, oh, look at this big move. Snap. Rejected, 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 right? Now you got your lower low, roll reversal set up, easy. You can fib it, roll reversal, price action type stuff. Just like, golly. You got this one. You got this shot in your bag. But if you don't do that, you're like golfing with your eyes closed. Okay? Message received. Is that right, Juan? Well, see, once you have your trade plan and the price is right in there, you're going to find 9,000 reasons to do it. Okay? Because you're filtering it, so you're looking for confirmation, and typically you'll find it. Boy, this looks just lost in the water, huh? There's not much going on there. Let's focus on pull up some yens. Life is a sketch. The link to my chart templates, these pivot points, and all the other indicators, they're in the description below. So you download the files, you watch the video on how to install them, you put the indicators in the indicator folder. For example, you put the profiles in the profile folder. It shows you where those folders are. Then you restart your MT4, bada bing, bada boom. Okay, you'll click on this tab and you'll have bajillions of profiles. Okay. Okay, so how do we handle a market collapse? Look at that. So I have it marked. Okay, I have it marked and we have it set up as if there are bears, that's where they would sell it. Okay. You can see I'm a bull, so I have plan A, plan B, plan C, but I've marked this for you guys. Okay. And you can see the collapse, the break. Look at the great opportunity to resell, second opportunity to sell. Where did the euro yen collapse? Well, on a monthly central pivot. Okay. So let's go back here. Roll reversal, resistance, 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 resistance. And yesterday, guess what? It was resistance. Okay. On a monthly basis. On a weekly basis, what is this? M3. On a weekly basis, you're supposed to sell it at 128.99. I guess we'll call it 129. Oops, that's not what I meant to do. Delete. Do this. Okay. So this area right here. So we're at a monthly pivot resistance. That's been resistance about 9 times or whatever it was. We're at the exact price where a bear is supposed to sell. Okay. Boom. Okay, now Juan says sold after the break. Absolutely, perfectly acceptable. This is where you do things like you look at the old, roll reversal type areas. I see it a little higher. You can use Fibonacci. Okay. Whatever, but what you do is after the break, which is perfectly fine, by the way, guys. I don't expect you to be able to say this is where you would sell. We know it's resistance. Okay. But it's not the case that's the best place to sell. It's just where you would look to sell. And the most important thing is once it's happened, you recognize what happened and you create a trade plan. The way you treat a breakout, right? It's like a 1, 2, 3, but or a breakout out of a zone, but you're looking to sell the lower high, whatever that may be, measured whatever way you want to measure it. Okay. Because we can measure it all different ways. You could call it a stochastic crossover, a CCI crossover, moving average crossover, roll reversal, fib zone, whatever, man. Just like it's all the same. Sell a lower high. Okay? That's perfectly acceptable. So that acted actually incredibly logically. Okay. What is this? We did pound, but these are daily pivots, right? So based on daily pivots, this is yesterday's sell zone, which is here. And this is today's sell zone, which is here. So if you're just a simple day trader, some good trades in there. Bulls would have tried to buy it here, and it worked a little bit, and then it failed. Maybe you would have made money, right? You would have bought it around, what is that, 44.5? And it went up to 45 and change. Yeah, you would have made 50 or 75 pips, sure. And then they would have bought it here as bulls. Same price, 44.5. And it only went to 45 and then collapsed. So once again, if you're just trading your bias, you would have made a little money here. You probably would have broke even here. And if you were a bear, this would have been a challenge in here. Okay? Would have been a challenge to manage the risk, but you probably didn't lose money. Today was much easier as a bear. But once again, you want to put yourself into trade plans where you're trading your bias. You know exactly your prices of buying and selling. You know them. Before you even trade, you know where you want to buy and sell. That is the key. Remember that time we had news last week? Was it CPI? We created a trade plan first, and I said, well, we would sell up here, right? Which was, I don't know, 50 pips away. And then the news came out, and it was like, unbelievable. Oh, look, all good news across the board. I'm like, well, just wait. Like, that's not the trade plan. Let it go up. Let it go up. Let it go up. But our trade plan is to sell it based on everything we discussed. And went up and then down, 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 down. Why? Well, that's simply where you sell. Well, Loretta Productions YouTube says, how do you find the sell zone? Well, for example, you look for resistance. Okay. Now, when I say sell zone, though, I'm talking about pivot points. So if you don't know how to trade pivot points, I would recommend you visit fxbootcamp.com. Take the pivot point or the swing trading class. Okay. If that costs too much money, go somewhere else and find pivot point trading strategy. I just don't know if they trade it properly. But yeah, so when I say sell zone, like daily sell zone, for example, daily pivots, weekly sell zone, weekly pivots, monthly sell zone, monthly. But I'm typically looking for clusters. So my monthly and my weekly might tell me I'm a bear, so on my daily, I know exactly where I want to sell today. If I'm a bear, it's definitional. It's not even like a discussion. And that's what's really helpful, Loretta, right? Where it's not like we're debating, like, okay, we're bears today. Where's the daily sell zone? No, it's definitional, right? Between 144.82 and 145.08. Okay? Is that right, Joe? Am I the only one that talks about? Really? That's so amazing. I have no idea how other people trade, so I just assume at some point they trade like me. Yeah, but do they? We're not talking about learning Forex. We're talking about learning pivot points. Oh, is that right, Joe? How awesome. That would be so blinding to me. And Pegler. Yeah, David Pegler, Rob Helena. Yeah. Yeah, I taught them both how to trade Forex, and then they both worked for me for several years. Yeah. All right, so anyways, let's take like a CAD yen. Remember how I said I don't even want to consider this trade until oil goes up? And yet oil hasn't gone up yet. And you see how that's protected me? Because I would have been blinded, right? Because we know my buy zone on a monthly basis, this is the pivot I want to buy it at. And I'm going to look at this and go, oh, well, that's support, so this is going to be support. And I start talking myself into it. Okay? You see what I mean? So I ask myself first and foremost, besides the technicals, what will move CAD yen up? Well, upward prices in oil would be beneficial to Canada, who's selling oil to the open market. So higher oil prices will benefit Canadians. They will get more money for the same barrel of oil, right? The barrel of oil always stays the same. It's always 55 gallons, not a drop more, not a drop less, 55 gallons. Now the price goes up and down. So, right? Like I know, because my family works in the oil business, and there's where is it? Lloydminster has a facility, and my uncle was telling me that they're pumping it out of the ground for $3 a barrel. Right? All right. So you can sell it for 60 bucks or 160 bucks. 160 bucks would be more profitable than 60 bucks, right? So that kind of thing, like, great. Higher oil prices would benefit Canada. Now, what would it do to Japan? Well, there's two arguments here. If oil prices are going up, it might be for positive global macroeconomics. Positive global macroeconomics would weaken the yen. Was it 42? 42 gallon? 55. 42. Yeah, maybe. Well, metric gallons or... yeah, well, my barrel's bigger than your barrel. Yeah, okay, my bad. So anyways, positive macroeconomics or improving macroeconomics should weaken the Japanese yen. Now, if oil prices are going up because of a shortage of oil, not because of macroeconomics, then Japan's not going to benefit because they're not benefiting from increased trade with foreign buyers. They're going to be punished because they import 98% of their energy comes from importing, which means now they're going to have to pay more money for their oil, and they're importing versus exporting, and all of that's bad, right? So you have to analyze the market. So I want positive global macroeconomics to drive up oil prices and weaken the Japanese yen. So I'm using this as a litmus test to say, do I have positive global macroeconomics or not? And I just got a result that says, yeah, right? No. Now, it could Arctic turtle its way back up and do something like that, and then maybe I'll start drinking that Kool-Aid. But right now, no, I don't have what I want, so I walk. Those are pivot points, Larita. Holy smokes, Larita. FXBootcamp.com. You got to get on it. Okay. I've been doing webinars about trading Forex for about 15 years. You're going to need to know pivot points. You're going to need to know price action. Everything else, you can do whatever you want. You can add whatever you want. I don't care what oscillators you use. I don't care if you throw in extra moving averages. I don't care if you use different moving averages. I really don't care. It'll be fine if you know how to trade. It'll be fine. Those are sort of add-on personality stuff. But you will not be able to trade, in my humble opinion, right? You will not be able to trade consistently and profitably in Forex without knowing price action and pivot points, both of which are leading indicators, which is probably why they're so important. Okay. Yeah, Ross, there was a time after the earthquake after the Fukushima incident, they shut down all their nuclear power plants. So what happened was there was no oil and no natural gas. Oil has its normal, because it's liquid, they just pull up to port, right? Well, at the time, compressed natural gas, liquefied natural gas, was a relatively new product. So up until that point, and of course, just maybe even 10 years before that incident, natural gas, essentially, if in 10 years or so, by year 2000, let's say, all nat gas, for all intents and purposes, right, 99% of all nat gas in the whole world was a very localized product because it could only be moved by pipelines. So, for example, Western Europe would get all its natural gas from Russia because they built all the pipelines, and, well, you can't really move a pipeline cheaply and easily, right? So you'd get nat gas from wherever you could, and the United States would get it from Canada and all that kind of stuff. Okay. Now the Canadians would also buy natural gas from like the Caribbean, and it was dirty, filthy, nasty nat gas, so they would pay hardly anything for it. They would liquefy it, one ship at a time, take it to Canada and turn it into fertilizer, and then sell the fertilizer to the Americans, right, and make tons of money. And the Caribbean stayed poor. But we're talking one ship at a time. We're not talking about maintaining the energy needs of Japan. Well, around the Fukushima incident, there was sort of a new technology of having ships and ships and ships and ships moving natural gas liquefied by moving it by sea. Now you can move a boat wherever you want. You can't move a pipeline, right? But you can move a boat. But it was a new technology, and it was a little bit expensive or whatever, but it was still fairly new. Then Fukushima happened, and Japan turned off all the nuclear power plants. And while all these ships were at sea, they were getting that gas from somewhere and taking them somewhere else. I think they were bringing it from somewhere up into Europe in a different fashion. But there were, just imagine, like 100 ships at sea, all filled with liquefied natural gas. And all of a sudden, at sea, they were all rerouted. And all of a sudden, there was a floating pipeline going to Japan because they moved all the nat gas ships, all just instantly. And that really showed the power of that technology. Very, very, very interesting. Again, so I studied the 200 years of the energy industry, and that was one part that I thought was really, really impressive. Yeah. So I think I've gone too long again. Yeah, I apologize. I babbled on a little bit long, and I did start late, so I apologize for that. Oh, well, I appreciate, yeah, Japan's a wonderful place. Good people. Yeah, it really is fascinating. I wrote a paper at Harvard about how the Middle East is going to be renamed the Far West, because oil will not move from the Middle East to the United States like it has been. Instead, the ships are going to leave like out past Dubai and out to sea, and they're going to turn the other way, and they're going to go to China. And therefore, it's the Far West, not the Middle East. And all those ships are going to, all Saudi oil and probably Iranian oil, right, for example, will just go to China. Everything will go to China. And the United States will have to rely on drilling Alaska and Canada, and they're going to have to save Venezuela and start sucking Venezuela oil. And by the way, Venezuelan oil, as you probably know, Venezuela has more oil than Saudi Arabia, but it's really, really thick, nasty garbage oil. It's thick and it's just like tar almost. But Canada has a lot of heavy oil like that too. And so the only oil refinery that can take Venezuelan oil and turn it into any product, whether it's jet fuel or gasoline or lip balm. The only refinery in the world that can handle that type of oil, Venezuelan oil, is in Louisiana. Yeah, sorry, Gary. So I will see you guys tomorrow. Be careful on these moves, guys. Remember, this is not a week you're supposed to lose a lot of money. Or maybe you take advantage of some of these trades on the bear side, especially if you've been knocked out of your bullish. I mean, there's some very obvious bear. I mean, this euro yen is a very obvious trade. I mean, it's very, very obvious. We don't know if it's going to happen, but it happened at exactly the place you would expect it to happen. And then the follow-up was just candy. Yeah. Cool, guys.